Okay, and welcome to our last profitability ratio that we're going to cover. So we've already got through the return on owner's equity. We've had a go at the gross profit ratio, and finally, we just need to focus on the net profit ratio. Okay, so the actual formula for the net profit ratio is the net profit over sales revenue. It's the same ratio, or the same formula that we use for the gross profit ratio, but we just change out gross profit and we swap in net profit. We express this as a percentage. Okay, so a really quick example. Let's say the net profit was $134,000 and our sales revenue is $354,000. That gives us 0.378, which is 37.8%. Okay, we've covered this time and time again, but you need to calculate your ratio. You need to compare your ratio. Is it healthy or sick? And lastly, you need to make a recommendation for what the business should do. Okay, the suggested level that it should be at it depends on the industry that the business is operating in. And it also, if you look at different textbooks, you're going to get different info on this. But the retail generally has a figure between 13 to 20%. But who knows what industry you're going to be asked to calculate on. A falling net profit ratio is a concern. The same with the gross profit ratio. Any steps taken to, if there's a problem, any steps taken to reduce your overall expenses would be really, really important. So things such as reducing how much you're reducing your wages, reducing utility costs, reducing admin costs, maybe paring back on an ineffective marketing campaign, things to bring your expenses down. Also, you could change supplier because you can deal with your cost of goods sold. That's also factored into your net profit. So that would also bring it down. It's found on the revenue statement, which is nice and straightforward. Okay, so the way we've structured this one is we're just looking at the revenue statement. We're going to do two things. We're going to compare it across the year. We're going to compare 2014-15, but then we're also going to make a comparison against the industry standard. For this business, Capty's Crumpets, which sounds like some sort of baker, the industry standard is 70%. That's what the ratio should be. So we're going to compare to see how the business is doing against that over a time period. Okay, so let's start with that. Our net profit is in 2014 was $106,440, and we're going to divide that by our sales revenue, which was up here, which gives us 0.58 or 58%. 2015, same goes, 154,000. We're going to divide that by our 220,000, which gives us 0.7%. Okay, so we've got our raw data. Our raw data is all calculated. Now we need to see we've had a below industry standard response in 2014, and in 2015 though we've really turned it around and we're now up with the industry standard. So your response needs to reflect that. There has been improvement in the data. While in 2014 the business was below the industry standard, in 2015 the business has lifted to a satisfactory position. No immediate action is required. Okay, straightforward. All right, let's see you have a go here with Conform Clothing. Give it a pause. Run those calculations, please, and I'm going to assume that you've done that. So 2014, the net profit was 94,710. Our income was 329,000, which equals 28.7%, well below the industry standard. 2015, let's have a look what happened. 190,890. We divide that by our sales, 389,000. Which equals 0.49 or 49%. Okay, so what's happened? We've started badly. We started very badly, but we've had some improvement, but we're still below the industry standard. So based on the 14-15 data, there is improvement in the net profit of this business. However, it's still below the industry standard. The business should try and reduce expenses and increase income through improving sales. Okay, so we have a problem and you've recommended some solutions. All right, press pause again, please. Run those calculations. Okay, hopefully you've done that. So again, the years are out of whack here. It's 2013, 2014, but it doesn't really matter. So our net profit, 106,440 divided by 181,000 equals 58%. Compare that to industry standard. That's stronger than the industry standard. Things are looking good. Net profit, 70,700. Sales 220. There we go, 3.21. 32.1%. Okay, so we started above the industry standard and we've declined. So we have a problem, right? So based on the 14-15 data, there is significant decline. Alarmingly, this decline is below the industry standard. The business must take action to improve this, reduce costs or improve sales. Okay, it has a big problem. It's very easy, right? Okay, so subscribe to this channel. Please leave a comment or thumb the video. Thank you for watching.